All right, awesome guys. Thanks to Dave and the Festival of Traders team for having me on. Just doing a quick audio visual check one more time. Can you guys see the screen and hear me okay? Just want to make sure everything's good on both ends here. I know Dave said he could hear me. You can type a Y or a yes or a one or anything there in the chat. I'd appreciate it. All right, good deal. Okay, so let me find my question box here. And we will go ahead and get started. All right, so there we go. All right, guys, so my name is Silas Peters with T2 Markets. Welcome. I want to say thanks for having me on here. Thanks for being here. You listen to a lot of great educators, so hope you're taking some notes, learning some good nuggets today. So basically, I think you're in the right place if you are one of those that are kind of just sick of losing money, tired of confusing strategies, and want something real, something that works. And by the end of this workshop here, you're going to see a way to trade with confidence with mechanical rules and high probability setups. And we do all of this without any guesswork. All right, so quickly, we must cover the risk disclaimer. We all know that there is risk involved with trading. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. So always consult your tax or financial advisor before applying risk capital. Now, today, this is what we're going to talk about: why price action patterns beat indicators, the 3-point setup explained, step-by-step entry and exit rules, real trade examples, and how you can literally start applying this starting today. And my goal for you is this, is that I will prove to you that this works in any market or time frame. But this is the real benefit of listening to this workshop today, is that there's not going to be any chasing hot stock tips. We don't need dozens of indicators cluttering our charts, and you're going to have the exact rules for entry, exit, and target. In fact, when you leave here, you will have the exact strategy rules to find and locate setup like we see here in Halliburton. This trade here in, let me get my little pen here in Bristol Myers, shorts here, longs here, Lockheed Martin, shorts here, longs here, longs here. 30-minute gold futures for those that like to trade gold futures here on the 30-minute chart. Short. This is $800 a contract. This is $450 a contract. With the volatility that we're seeing, some absolutely incredible movements here. 5-minute chart of the E-mini S&P. You've got 3 points here, 8 points here, 6 points, 10 points. It's $1,300 a contract in a single session. Then for those that like to scalp, this is a 610 tick chart, like the 610 and the 233 tick chart. Yeah, 4 ticks here, 7 ticks here. You know, who would be happy with $218 a day, or $500 a day, or $1,000 a day, or even $50 a day? Well, the pattern that we're going to be covering is responsible for identifying these moves before they happen and lets you know when to get out. So you are in the right place today if you just want simplicity and consistency in your trading. If you're one of these that have, tested dozens of indicators, subscription services, you've been frustrated by emotion-driven trades, you want something simple and mechanical. If you're a retail trader or even a pro who's fed up with, overcomplicated systems and the endless noise of indicators, then pay close attention, because what I'm about to show you is different. You're going to finally get something that you can rely on without guessing. Now, before we get into the meat and potatoes, I'm going to quickly introduce myself. My name is Silas Peters. I'm the founder of T2 Markets. I'm a co-founder and partner of Blue Marlin Advisors. I'm an entrepreneur, risk taker, full-time trader. I'm also a speaker, author, educator. Started my career at the Chicago Board of Trade, worked at a private family office. But most importantly is that I'm a husband, I'm a father to 2 girls, I'm a mentor to thousands of students around the globe. And look, I've spent years in the trenches, trading stocks, options, futures. I've tried everything, indicators that claim to predict the market, flashy newsletters, elaborate strategies that cost more in frustration than they've ever paid off. I've taken losses, but I found what works, and now I build tools so you don't have to bleed your account dry by experimenting. Now, what I want to kind of do is address my struggle initially, probably exactly what a lot of you here are going through or have at some point, really just kind of overcomplicating your systems, chasing lagging indicators, making emotional decisions, and really just lacking a repeatable edge overall. And before I discovered this pattern, I was right where you are. My charts look like spaghetti, had indicators everywhere. Chasing hot stock picks and just really overcomplicating the process. Greeks and robot trading and expert advisors and black box systems and just way overly complex strategies. And the drill of, hey, we need to add some more damn indicators onto our charts. I've seen people's charts that look like this, and we can't even read the price action. And it really it leads to this process of emotional hesitation, entering too late, exiting too early, risking more than you should. And I got burnt, again and again. I lost money, lost confidence, and I felt trapped in a cycle of hoping and second guessing. And does this resonate with anybody in here? Does this resonate with anybody? Yeah, I mean, of course it does. And so it kind of led me to what I call the big discovery, right? I discovered something powerful, and it's what we call the 3-point reversal pattern we're going to be discussing shortly. It's been around forever, but most traders ignore it or overcomplicate it. And I thought, what if I could build something completely mechanical around this, with exact rules, precise targets, no more emotional guessing, and start with that, back it up with tests. I was already doing it manually, and I knew the power of it and that it already worked. So I've already given you the hit. It only consists of 3 steps. And those 3 steps are this. We're going to look to identify the trend shift in whatever market or asset that we're trading, define what our exact entry, exit, and targets are, and then we're only going to trade when those rules align. So let me ask, can you follow 3 steps? And if you do these, then your trading becomes cleaner. And if you skip them, then, well, you're back to the noise. And because we're trading price action, we have a strategy that produces repeatable setups, works across any markets, and they're easy to spot in real time. And these charts right here are going to start jumping out at you, okay? We're going to be able to identify the exact strategy that led to a 55-point move here, a 7% move in SLV, here in Dick's Sporting Good, $10, $12, $15. And how do I know? Because these repeat day in and day out, because we're trading pure price action, okay? Coca-Cola, Euro USD charts, 125 pips, 110 pips. Here in Baidu, 51%, 56% on a weekly chart. And I'm showing you multiple assets, multiple time frames to prove to you that it just flat out works. Here on Coca-Cola, this is a 1-minute chart of E-mini S&P. This is plus 11 points on a 1-minute chart. All right, and I'm going to tell you that simplicity beats complexity. Okay, how smooth, how clean were those setups that I just shared with you? Yeah, so let's do this. Let's get right to the rules of this system. Now, the 3-point strategy is this. We've already talked about identifying the trend shift, spotting the pullback, and then we're going to confirm it with a breakout trigger. Okay, now this strategy helps traders identify trend reversals and continuation patterns with high accuracy. So whether you are a day swing position trader, understanding this pattern will significantly enhance your ability to spot profitable setups in the markets. So let's start with point one, as this is kind of the baseline starting point for our pattern. Step one is all about spotting the reversal, okay? Point one is the trend peak or the bottom, the highest point in an uptrend or lowest low in a downtrend within the current price movement, all right? So I'm gonna show you a quick example. So here we have a market that is clearly going higher, higher highs, in a downtrend. We've got lower lows and lower lows. And so point two is the retracement. So that's the first tracement that we see, say from point one on a move lower or on a move higher from point one on a downtrend. All right, so let me show you an example of this. In an uptrend, we have point one identified. When we get that first retracement, that's going to give us point two. In a downtrend, we have the lowest low, which is our number one, and then we retrace higher. That's going to give us our number two. All right, so point three, as the name implies, this is our third leg. It's either the second low point or the higher low for a long or bullish formation, or the second point or lower high for a bearish formation. So you can see here, we have a move back higher. This is a lower high. It's lower than our number one starting point. And then here we have a higher low because it's higher than our number one starting point. So there is our one, our two, and our three. So there it is, right? That is our 3-point pattern. But what are we missing here? What are we missing? Yeah, we're missing, okay, well, that's great, but how do we enter? You know, how do we enter? Where do we enter? Anybody want to take a wild guess on where or how we enter? Well, we simply wait for a break above or below the number 2 point. It's really that simple. So in a bullish entry here, we have our 1 and our 2 and our number 3. And this means that we're bullish. We are looking to go long, expecting it to go higher. We're simply waiting for the market to what? Trade above the number 2 point. And so we can all see that's exactly what happened. We broke and closed above that number 2 point. That's something that we can all agree on, all right? So in a bearish entry example, we have our 1, we have our 2 and our 3. What are we looking for? We're bearish. We're looking to sell this particular market. We're expecting it to go lower. So what are we doing? We're waiting for the market to come trade below or break below that number 2 point. And that's exactly what we get here on that next bar. So can we all agree how this is damn near, if not 100% mechanical up to this point? I think that's something that we can all agree on. Yeah, so we're all seeing the same thing. That means it's rules-based and that it is mechanical. So once the price breaks through point 2 after forming that point 3, it signals a trade entry, and that is our 3-point pattern. So very straightforward. Now, what about profit targets or limit orders to take profits? Every trade needs an area to take profits, but also, very important, a stop loss to manage risk. And then overall trade management. What the heck do we actually do once we are actually in the trade? All great questions and extremely important. We must always use a stop loss to protect our capital. And we always need to know where we should look to take profits, because that's why we are in the market in the first place. So let's first cover stop losses. This simply means that sometimes Mr. Market does not do what we want it to do, and it goes in the opposite direction. And that's okay, because we're not going to be right 100% of the time. So what we do is we put a stop order in to protect our capital in case we're wrong. So to keep things simple and mechanical, as we've been saying, so for a bullish setup, we're going to just place our stop or our risk below the number 1 point. All right, so here's our 1, here's our 2, here's our 3. We're going to put our initial stop just below the number 1 point. For a bearish setup, it's going to be above the number 1 point. So this case, if we're wrong and the market decides to reverse and go against us, our stop or risk is above the number 1 point. All right, so again, we do this to manage risk and protect ourselves against adverse price movements. Now let's cover the fun part, and that is profit taking. As we know, we must always use stop loss to protect our capital, but we also need to know where we should look to take profit, as this is why we are in the market in the first place. So profit taking is very simple and very mechanical process as well. So it is simply the distance between the low of the 1 measured to the high of the 2. And so we're going to measure this range or that distance, and this example, that is $1.98. So we're going to take that $1.98 and we're going to measure it from the high of the 2. So whatever this low is to whatever this high is, it's $1.98. We're going to add $1.98, and that is going to be our take profit levels. Everybody follow me so far? So for a bearish setup, it's the same scenario, exact same scenario, just flip. We're going to measure the distance between the 1 and the 2 and then measure down. So we're going to measure from this high down to the low of the 2. In this example, that range is $3.68. So now we're going to take that $3.68 and we're going to subtract it from that low and measure down. That is going to give us our profit target. So everybody follow me so far. Completely 100% mechanical at this point. So to recap, for a bullish 3-point strategy, we've got the trend established, price is heading lower. All right, so price is heading lower, price is heading lower. Then price retraces higher. Okay, so there's our 1, there's our 2. Price makes a higher low, which is our number 3, and then our entry point is going to be a break or close above the number 2. For a bearish strategy, trend is heading higher, price is heading higher, then price retraces lower. There's our 1, there's our 2. Price attempts to make a new high, but makes a lower high, and then we are looking to get short on breaks or closes on a retracement back below the number 2. All right, so let's walk through some additional examples because it is just about repetition. This is a monthly chart, and I purposely have hidden the ticker symbol because it doesn't matter, right? We could be looking at Alibaba, we could be looking at corn futures, we could be looking at Bitcoin or the S&P. All right, we have a new high, retrace lower, pull back up. We have our 1, 2, 3. All right, so with that 1, 2, 3, again, to find our target, we're going to measure from the high of the 1 to the low of the 2. Whenever this is, we're going to measure lower. That is our first target. Weekly chart, same thing. 1, 2, 3. We're going to measure the distance between the high of the 2 and the low of the 1. We know our initial risk is going to be below the number 1, and our target is whatever this range is here, measured up above the high. That is our profit target. And we can see these things map out like clockwork every single day. Here's the daily chart. We have a short trade here. We have a long trade here. Hourly chart of this market. I know that this is the S&P 500, but frankly, it doesn't matter. We have a short trade here, long trade here, short trade here, and we have a short trade that is in the works. So again, here we are. The blue line indicates the breakout or entry. There's your stop or risk, target 1, target 2. In this case, entry or breakout level, risk, target 1 and target 2. All right, and this is $1,100 of work here, $500 of work here, and then this one is in process. Now, we can work all the way down to lower time frames, guys. So I know people using this on 15-second charts, 15-second charts. And so by having this mechanical based plan, a completely mechanical based plans, it means that we are not forcing entries. We only trade when all of the rules are met. So no forcing trades, no guessing. No fudging criteria just because you feel like the market should move up or down. We simply wait for our three-step criteria to be met. And this is what separates hobby traders, emotional traders that are second guessing, chart hopping, chasing entries, to those that follow a systematic process. All right, follow a systematic process, because it's either there or it's not. So just like we see here, we have our 1, 2, 3 pattern. There's our short giving us our targets. We have another short here with our suggested risk and our targets. More real world examples here on gold. We wait for the pattern to set up and get asked a lot, well, can you trade this? Does it matter with the stocks or options or futures? No, absolutely not. It doesn't matter. We can trade gold futures here. We can also trade GLD. We can trade options on these markets. We can buy put debit spreads. We can sell bear call spreads. We can trade minis, micros, whatever your flavor or style may be. Delta Airlines, again, long, short, and we can trade the natural ebbs and flows that are occurring in the markets in real time, right? We can buy the underlying, we can buy and sell Delta stock all day long. We can buy calls or puts. We can buy call or put spreads, or we can sell credit spreads. We can sell bull, bear call, bull, put, or bear call credit spreads if that is what you enjoy doing, okay? Cardinal Health. I'm just trying to show you, I know this is becoming redundant. I'm just trying to show you that it is redundant because it's a repeatable, repetitive process that we implement, okay? Last one here at Google. Here we are, we take advantage of a short, we take another advantage of a short. We just wait for the rules to show up, okay? We wait for the rules to be met, and we execute the trade. So let's talk about what we've learned so far. It's very simple, 1-step, 2-step, 3-step pattern. Does everybody here up to this point feel confident in what I've just shown you? Something that you could say, yeah, yes, I can follow this. Yes, I can do this, because all we're doing is following a simple, repeatable pattern. Step one is we're spotting that pattern. Okay, the market is heading lower. We are looking for buys, right? We're looking for a reversal. Everybody here selling breakout, selling new lows. We don't like to sell low. We want to buy low, sell high. We want to sell high, buy low. And so we're looking for these high probability reversal points. Market is heading south. I'm waiting for that last low to form. And then I'm going to start my number one count. I get that retracement. And then I get my full 1, 2, 3 pattern. And I already know days in advance what I'm going to do. I know where I'm going to be getting in. And once I do get in, I know where my risk is and where my profit targets are. Okay, where 98% of other traders are scratching their head asking, well, where do I get out? You know, should I just guess? Should I plus 3%, plus 14 ticks? You're just making it up. Well, we know this with the mechanical process. We know that once we are getting long, we know our risk is going to be below the number one, and we know our target is the distance between the high of the 2 and the low of the 1 measured up. Everything is done in advance, and then once the rules are met, we execute. We execute and we put the trade on. Okay, so break above the number 2 confirms your entry, and this is a bullish or long-sided setup. So what do we do? Well, we can do many things. We can buy that underlying stock or futures. We can buy call options. We can sell put options. And again, there's absolutely no guessing or fudging of criteria because we feel like the market should do X, Y, and Z. We know that the rules are the rules. We're going to get long, and we're going to simply be patient and wait for price to move to our target. Okay, if we're bearish, we can sell the stock, sell futures, whatever asset that is. Buy put options, straight puts, buy put debit spreads. We can sell bear call options. Okay, now you're probably wondering, you know, how do I do all this myself? How do I find these patterns on my own? Well, at this point, you know what it takes, right? You see the steps. You may be thinking, well, great, now I've got to learn charts or multiple indicators, spend hours back testing, buy expensive tools. No, that's what the strategy is built to eliminate. You get a system that does the pattern spotting, the plotting of entries, exits, targets, daily setups across markets and timeframes, so you can start trading with clarity. What if that could help you find high probability trades on a daily basis? Would that help you if you had a tool that locates the pattern for you, that could automatically plot your entries and exits, could scan multiple markets and time frames? Well, good news, that's exactly what we did. That is exactly what we did. It was built a tool that does just that, that replaces the need to hunt and manually hand draw these patterns. So if you remember what I was showing you earlier, where we're doing this all by hand, and guys, I did this by hand for years across multiple markets and time frames, where we had to spot the pattern that was forming, had to map out the 1, 2, 3 points, and then lastly, where we had to get the old calculador out and to find the range for our targets. And it's crazy, especially if you are trying to do this real time on an intraday chart. There's a question, can you trade intraday charts too? 100%. Here, with the powers of technology, all of the heavy lifting is done for you. Plotting the 1, 2, 3 in real time. Once we break, we get our entry, risk, target 1, target 2, new highs of the day, plotting in real time. Here's our entry, here's our risk, target 1 and target 2, all done for you. All of the calculations. This is a 55-point trade in the NASDAQ on a 15-minute chart. Here's our 1, here's our 2, here's our 3. There's the entry. We break down, hit target 1, and now the market is looking for a new short. Here's a daily chart of SLV, break below, target 1. Here's Dick's Sporting Goods. Again, multiple entries, $10 a share, $12 a share, $15 a share. Coca-Cola, 4.5%, 6%. Think about how you could amplify that with markets like options. All right, so we've been looking at, these are trading view charts that we see here. We've also built this tool for Thinkorswim, TradeStation, NinjaTrader 8, Trading View, MetaTrader 4, MetaStock, and even wealth charts. So you can see the exact setup, the exact mechanical based setup onto your platform of choice. Now, why is all this different? You don't need dozens of indicators, as you've seen. There's no chart hopping, and there's absolutely no second guessing. Now, I'm sure that you've tried it all, 20 plus indicators, 10 plus subscriptions, loads of strategy experts. They clutter your mind, they drain you mentally and financially, and they still leave you lost. Well, this is all different. Simple mechanical rules that you can follow. And the benefits of all this is that it means mechanical consistency. You know exactly what to do next. It's going to reduce your stress because you're not going to be making emotional trades and decisions, and you're going to be handed high probability setups every day. When you implement what you've learned today, your new trading day looks like this. Confidence. You wake up, you glance at your scanner, you see the setups and the reversals, you know exactly where your entry, exit, and targets already are. No more emotional guessing, no stress, and better decision making. And I'm going to tell you, as that results matter, using this as one of my primary entry method techniques, we get results flat out. Otherwise, we would not be talking about this 15 to 20 years later when I first discovered this system. Results matter. And I would not continue to be here blowing hot air talking to you today if I did not believe in it and I did not use it. Plain and simple. Okay, so why do I still use it? Because it works. Because it's simple, repeatable, it's pattern based, so it's not lagging, and it works across any markets and time frames. I can put this on any market or time frame and I can see the patterns working. And now we've been able to automate it. I've built a step-by-step program that you can master this strategy, automate, execute, and repeat. And we do it what we call the 3S code. Now, let me ask you this. How many losing trades have you taken because your system was unclear? How many indicator subscriptions cost you $50, $100, $150, $200 a month? How many hot tip newsletters promised the moon and delivered scraps? Well, if you added up the time and the stress, the mistakes, and the pain of all of that, you've already paid way more in losses and wasted effort than what this will cost you. A 3S code, you're going to get full video training, the indicator and scanner suite, members only Telegram room access, and weekly live trading sessions where we walk through real trades and real markets together. Now, if you tried to build what I'm giving you here today, the scanner, indicator, rules, training, live sessions, you'd spend thousands, you'd lose time making mistakes, costing you money, you'd be stressed. But here it's packaged, proven, ready. You're not going to pay $3,000. You're not going to pay $2,000. Hell, you're not even going to pay $1,000 today. With this package, we want people to actually have something that works and start seeing real success. So with this package, you're going to get access to the 3S code indicator and scanner, access to our weekly strategy and scan sessions, and our private Telegram room, plus 3 additional bonuses. And it's all for a one-time lifetime payment of $397. And you can get started by going to code.t2markets.com, code.t2markets.com. And you can start spotting these immediately without hesitation. Now, this package comes with the following platforms. You're going to get access to MetaStock, Thinkorswim, TradeStation, Ninja, TradingView, MT4, Well Charts. And if you use more than one, that's fine. We don't limit this to just one license. If you use, say, Thinkorswim and TradingView, you can load them up on both. All right, guys? Now, you're also going to get access to our weekly strategy and scan sessions. These are held every Tuesdays at 11 a.m. Eastern. We discuss top setups. We do talk about institutional analysis, day and swing trading, using options, looking at live setups and ideas, and so much more. Now, this indicator and scanner package, again, comes with complete settings that you can adjust and manipulate based on what you want to see. If you want to look for setups only, triggers only, tops, bottoms, look for stocks, swing trades, day trades, any or all of the above, you have the ability to do that. Now, also want to throw in additional bonus here. This manual chart pattern principle trading guide will help you teach how the markets work, why markets move the way they do, who the players are, and how to look at it and understand the market the proper way. Bonus setups and how we use the power of seasonality to trade the 1, 2, 3 pattern. Bonus 2 is my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this because I believe options are a very powerful instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so and do it the right way. Bonus 3 is access to our private Telegram channel. This is, again, where every single day I'm posting ideas. Could be a stock, could be a futures market, could be a currency market. I'm basically handing you fish while you're learning to fish. Look, guys, it's not just me. Students are coming to me all the time. I've tried indicators before, they didn't work. I'm too new, I don't have time, markets might change. Well, guess what? This strategy is based on price action, and price action is timeless. It works on all markets, all time frames. It's mechanical, it's proven, and this is not some secret sauce. It's mechanical. I've given you the rules. Now you can choose to do this manually. You don't need an indicator, you don't need a scanner, but we've made your life easier so you can find these, make your trading efficient, and find more ideas. Now we've opened this up here, guys, to the first 20. Go to code.t2markets.com. This is a one-time lifetime access, so if we make any changes, enhancements to the technology, or we add another platform, you guys are all grandfathered in, and you get access for and support unlimited as long as I'm around. Okay, so but I appreciate it, guys. I appreciate you tuning in, and I want to say thanks to Dave and the Festival Traders community for having me back on. These I love these things, and again, this is my bread and butter, and I really look forward to having you on board. So thanks again, Dave. Hopefully I got you back on track there. Have a great afternoon. Have a good week. Stay safe out there, guys, and we'll see you in the markets.